And by the way, this is not financial advice. I'm not a financial investor, right? Anything I say, don't listen to me, right? This means nothing, right? I'm not telling you what to buy. All those stocks that I call over there, do your own research. What you'll do when you go onto your Scotia account, you're going to look for the investment area. So it's going to bring you up to their investing page, and then you have a choice where you could choose between a basic investment account. That's where Scotiabank will be putting money into your investment for you. You don't need to know anything about stocks. You just need to put money every month. You just have to choose if you want to go with low risk, medium risk, or high risk. So that's just a basic direct investment account. You can also have an option to choose a self-directed investment account, and this is where you can choose certain stocks that you may want to buy. Just say you wanted to own Tesla or Apple stock. In doing a self-directed account, you are actually going to be in control of the investments that you want to make. So you'll be able to take your money and put it to use to buy Apple stock, Tesla stock, and then go from there. Looking back in like all the stocks that I traded in my life, if I were a new person, what I would do is I would actually look for companies that are well known, right? So for example, I would look at, say, Colgate. I brush my teeth, I look at Colgate's going to be around there. I drink Pepsi, I drink Coke. These two products are always going to be around there. So if I had to get into investing at a young age, I would go for well-known names. If we look back in history at all these well-known companies, you tend to see their stock charts just going up and up and up. So going with the strong company with a good reputation, that's where you're going to allow your money to grow more. Some companies you're going to look at, there's a thing called a PE, the price that they are versus their earnings. So a lot of times these companies, like, depending on the company, that could vary. If you go for a company like Amazon, that's going to look like crazy, but in the future that actually pays off more. So just say we were to invest in a company like, say, Sears or Amazon. Sears is probably going to have a price to earnings ratio of, like, say, 10, right? That means how much it earns, it trades for 10 times earnings. But Amazon might have a price to earnings of, like, say, like 1,000, right? That means it earns for every $1 it earns, it trades at $1,000 more. But when we look at a company like Amazon, we'll say, well, you know what? In the future, Amazon's going to be there, so I don't mind paying more for those earnings. Whereas a company like Sears, who knows where they can go. So you kind of have to start looking at, like, where you believe a company is going to go, and if you like the company. So I would start by researching different companies with stuff that you use, because if you use those things, you tend to get a better understanding of what you're investing in. I would say first you want to learn about, like, why do you want to invest? Do you want to invest to grow your wealth? Do you want to invest to preserve your wealth? Are you a high-risk person, a low-risk person? Like, you have to look at those things. Investing is just following certain trends and staying with it for the long run. So I would say kind of get to know who you are as a person, because investing is going to go up and down and up and down and up and down. It's going to be a roller coaster. And sometimes, like, you'll be good, some days you'll be bad. Sometimes you might be going up all the way like this, and you're going to get some corrections in between. You kind of have to be the person that's going to be okay with one day your $10,000 turning into like $9,000, and then the next day it's $9,500, and then the other day it's $10,500. You're going to have to be okay with seeing volatility into the amount of money that you're putting in. To get started, it's going to be depending on which product you choose. So the bank is going to say, well, if you go with self-directed, they may have requirements stating you need to put at least $2,500 down, $5,000 down. The bank is going to determine that requirement. If you go with their products, they may say you can choose just put in a certain amount every month. So one area might not have requirements for money that you need. That's the one, say the registered investment account. The registered investment account by the bank, they may not have a requirement. They may just say deposit $200 monthly, $300 monthly. If you go with a self-directed product, they may have a requirement stating at least a minimum $2,000, $3,000, or $4,000. So you have to look at the bank. Each bank and each trading platform is going to have their requirements that they need. Any money that you want to use to get started should be money that you can afford to lose. So if you want to get started investing and learning to invest, depending on which way you're going to go, right? This is money. Anytime you put money towards investing, it's going to be money that you want to pay yourself in the future. It's also going to be money that you don't need today, and if you lose it, that's okay. Once you look at it from that point, whether it goes up and down, or sideways, you're going to be okay with that movement, because the money that you're putting in there is not affecting your lifestyle. What I would recommend is that, just say you are making, say, $4,000 a month. After you pay everything, whatever your bills are, just say if you can put, say, $250 to $500 a month into your investment, that would be great. In the future, as you get more raises, I would recommend that you put 50% of your raise into your investing. So just say as you get older and as you make more money, you start putting more money into your investing. So you kind of try to live the same way you're living right now, and excess money goes towards your investing. The good thing about a lot of investing products is that, just say you start getting into your investments like $50,000, $100,000, what you can do in the future, instead of having to sell your investments, you could actually go to the bank and borrow against them. So just say in the future you wanted to buy a house and you have $100,000 in a stock portfolio, you may be able to use that as collateral and borrow against that to put money towards your down payment, your house payments, and stuff like that. So you don't necessarily have to cash out your stocks and be hit with a capital gains tax. You could actually borrow against it to basically still fund your lifestyle and get everything you want in your life. So if you actually looked at this video, I'll say that you're on the right track, right? You have to begin investing. You have to start it. You can't. The biggest risk you can take in life is not taking any risk at all, right? You see a lot of people playing it safe. You see a lot of people not doing anything. And the people who actually become financially free is they actually have to take that risk. So the fact that you are looking at this video, you're a person that's going to succeed, because you have to go through this process. You have to want to learn. You have to want to sit down and watch this video to learn more, and your future is going to be bright. So you're on the right track right now. It's just to make sure that don't go into like penny stocks where you want to be like, I become a millionaire, because a lot of people, they do that and they never make anything of themselves. All you need to do is just buy good stocks in companies that you believe in, that people know about, that has like a very nice size market cap, like Apple, Google, Tesla. Actually not Tesla, but you know, companies that are known, and you'll be in the right direction. Don't go for a company that you just hear from some random person that's going to tell you, man, you know, you can become a millionaire with this one, right? I wouldn't do that. You're most likely to go broke with that one. Bye bye.